Welcome to Signal Stock. This week only 2 stocks tripped our scan, and together they teach the single most important lesson in reading a market. One stock jumped almost 19% on good news. The other fell nearly 14%, right after reporting one of the best quarters in its entire sector. The question that runs through this whole episode is simple. When do you trust the story a stock is telling you, and when do you trust the price instead? Let us break it down. First, the accountability check, and this week it comes with a milestone. 24 forecasts confirmed so far. Every single one moved in the direction we called. 17 of 24 landed inside their full range, and here is the part that matters. Since we started sizing our targets to each stock's actual weekly volatility, every forecast across the last 3 weeks has landed in range. The method is working, and we will keep showing you the misses alongside the hits. First stock. Moderna, and this is a case of trusting the story. Moderna jumped after an FDA advisory panel voted 9-0 that its mRNA flu vaccine has a favorable benefit-risk profile. A unanimous panel is about as clean as a catalyst gets in biotech. It de-risks the company's first major non-COVID product ahead of a final decision on August 5th. This is not a rumor or a hope. It is a completed, dated event, and the price is following it. Now here is a technical point worth understanding. Moderna closed at a fresh 52-week high, with no ceiling of old resistance above it. That means we do not cap our upside target at the previous high. We size it off the stock's own volatility, which points to a bull case meaningfully higher. One caution. The stock is technically overbought after this move. In a confirmed breakout, that is not a sell signal. Overbought stocks in strong uptrends tend to stay overbought and keep climbing. It just means we would wait for a small pullback to enter, rather than chase it here. The story is real. The discipline is in the entry. Second stock. Micron, and this is the mirror image, a case of trusting the numbers over the tape. Micron reported one of the strongest quarters you will see anywhere. Revenue up 346% from a year ago. Record margins. And a forecast for next quarter of around $50 billion that beat expectations by billions. And then the stock fell 14%. So what happened? The entire chip sector sold off the same week, on fears of a memory oversupply and simple profit taking after the stock had run up around 700% in a year. Micron and its peer SanDisk both dropped more than 10% together. When a stock this fundamentally strong falls on great news, the seller is not reacting to the company. It is the whole sector rotating out at once. That is a very different situation from a business breaking down. Our stance is to hold and accumulate on stabilization, not to chase the fall. And one number explains our wide target band. Micron's typical weekly swing is over $120. A stock that moves that much every week needs a wide band. Sizing it like a calm, low volatility name would guarantee we get the range wrong. The one real risk to watch. If that memory glut fear turns out to be a genuine oversupply rather than just sentiment, the thesis changes. That is what next quarter's report will tell us. So, to close, 2 stocks, 2 opposite lessons. Moderna's price is following its news, a confirmed catalyst, so you trust the story, but you wait for the overbought entry. Micron's price divorced from its news, a record quarter sold off by the sector, so you trust the numbers and accumulate as it stabilizes. Our standout call this week is Moderna, the cleanest catalyst on the board, provided you are patient on the entry. If this was useful, subscribe and hit the bell for new signals every Friday.